Here in Chicago this morning, it feels like minus 11 degrees, and yet there's a cardinal singing its heart out. I don't know if that's a contrarian sign, but certainly you always are looking for when does the wind shift and when do things start to change. Hello, this is Stephen Harris, the head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:56 a.m. Central Time, and I'm recording this in preparation for the market day of February the 27th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So, contrarian signs. When you get a whole bunch of signs all loaded up to one side, is it time to start going the other direction? Well, these are the kinds of things that we try to explore in our morning report each day. Let's take a look and see what happened in the overnight action so far. As of the cut time this morning, the futures were, we'll call it scratched to just slightly weak, nothing of any significance. Crude oil, probably the big story in the overnight, up 2%, right at $1 move up since yesterday's close. You have, let's see here, euro also up about 0.35%, bonds down slightly, and gold up slightly. Nothing really significant there in any of those 8 markets with the exception of the crude oil. In terms of overseas action, I don't see anything there that really gets me excited. China just up a little bit, Hong Kong down a little bit, Japan scratch, Germany scratch, United Kingdom down 0.2. Nothing really of significance there. And the U.S. market, we had a few minutes ago GDP come out. In terms of the rest of today, you got Chicago PMI, pending home sales, and University of Michigan consumer sentiment and inflation expectations all come out during the trading day today. So you do have some macroeconomic reports that you need to dance around during your trading today. And let's see, in terms of volatility, obviously we continue to get crushed towards the lower side, and that certainly is one of those contrarian signs that we look for. When volatility is very, very compressed, it can only go up to an extent. And indeed, you see the Russell, we're at a 3 on the historical implied IV percentile. So while it can stay low, it will, as a percentile, pot odds are we are going to go higher. It's just a matter of when. So we'll start to look for those signs. You also look at these standard deviation moves. Look at this. We've now gone 10 trading days, 2 weeks, since the last time we had a standard deviation move in the S&P 500. The same thing for the Russell. So clearly a very, very compressed volatility that has come into the market during this most recent move up, and certainly getting to be due for a pullback. Bonds did roll effectively today. You should be on new contract if you are trading the 30-year bond futures contract, so be aware of that. Also, really not a lot of changes here. We continue to be very bullish. Our intermediate term phase opinion still phase 3, higher highs, higher lows. Portfolio posture, IBD status, confirmed uptrend, GMI index, quite bullish. Active trader posture, very bullish. Position sizings remain at 100% for both investor and active trader opinions. Market timing continues to be 1-day outlook slightly bearish, 3-day outlook slightly bearish, and a 2-week outlook slightly bullish. All 4 indices on the market forecast opinion are very, very high and up near their upper ceilings. It really cannot get much higher. Obviously, we're at 99 on 2 of them, and 97 and 98 on the others. So there's very little opportunity for them to peg much higher. And really, it's just a question of when do they start to roll over. That's what we're looking for there at this point. Hedge warning status, absolutely normal. Threshold level 0. Nothing from volatility-based metrics to give us any concern at this point. Trend-based, very strong. E-mini chart indicators, also no new signals. The only thing that's really a fly in the ointment has been in recent days. We've seen a rollover in the intermarket risk aversion indicators. 4 of the 5 have basically rolled into a risk off. You might argue in some of these that they're just rolled neutral and that they're just gone into consolidation. But bottom line is, they clearly aren't as strong as what they were, say, a week ago when they were pretty much flying all for risk on. So these are probably the first sign that we've had anything starting to run out of energy in a bullish momentum. Option income strategies. VIX is inside the acceptable window, all good to go there. Cover call strategy, slightly bullish, so equal distribution of in the money and out of the money strikes is the opinion, and put selling, slightly bullish, good to go on selling puts. And indeed, if we do get a pullback, that could be a grand opportunity to enter some new positions with puts sold against a core portfolio of baskets that you are willing to own. Let's get down here to the other reports that have been updated for today. Sector market postures, really very, very green across the board with the exception of 2 sectors, energy and utilities. If you thought you had a bottom in these 2 sectors, life is tough when you're trying to find the bottom. And utilities, while it looked like for a moment there it was finding some support, it rolled back over again. Energy also, obviously in the overnight last night, big up. But when you're trying to find a bottom, oftentimes it is quite choppy, and you've got to live a very nimble life. But be aware, if you're trading in those 2 sectors, that you've got to have a little different expectation for what you are doing with your risk profile. Other sectors, as you see, much easier trading. And indeed, when we look at percent change, information technology up 0.67, telecom up 0.49. Obviously, we'll wait to see how this net neutrality rulings are going to play out. There's obviously some winners and some losers in that. So if you're playing in those sectors, you need to kind of understand how that impact will move. You may find that others who do understand are making the moves, and you can follow their breadcrumbs using your technical analysis skills. Healthcare was also up a little bit, but in general you see utilities and energy, look at these 2 down very severely yesterday. And while energy's up today big so far, you see the kind of volatility that is playing in that space. Industry groups, we continue to see the same 5 dominate the top of the ladder here: retail, railroads, internet, healthcare, and transportation, in that order. And we've seen biotech play in there from time to time. So this has been very, very consistent and in recent weeks, so those should continue to be your primary focus. Let's see. Well, as always, greatly appreciate your following us and liking us on YouTube and your other favorite social media platforms. If you're there, we are there. Facebook, Twitter, StockTwits, and Scootify. And then, of course, additional information can be found at the website falconglobaltraders.com, including about each of the 3 live trading rooms: equities, options, and futures. Questions may be sent to support at falconglobaltraders.com. Disclaimers, as always. Please hit the pause button if you need more time for the disclaimers sheet. And as always, we greatly appreciate you each and every day in the Falcon Global Trading community. Look forward to seeing you on Monday, and good trading.